Hello and welcome to Business Agenda. I'm Dan Murphy. ANZ is the first Australian bank to move into the local ETF market, joint venture with the London-based investment firm ETF Securities. The new company, called ANZ ETFS Management, will launch 6 new ETFs on the ASX in the coming weeks. For more on what this will offer Australian investors, Danny Laidler from ETF Securities joins us live from our Sydney CBD studio. And Danny, welcome to the program. Thanks for joining us.
Hi Dan, thanks for having me.
First of all, could you just talk us through the decision to launch the ETF and why is now the right time?
Sure. The ETFs in Australia have been growing very strongly in the recent years then. They're actually up 60% over the last year, and April was the 15th consecutive month of growth within the Australian market.
So now's a fantastic time for a large institution like ANZ to enter the ETF market. Also, ANZ understands the benefits that ETFs can bring to investors in providing investment solutions. They're very easy to trade. They trade on exchange just like a normal share. They're low cost and they're very secure.
And ANZ is listing 6 new ETFs on the ASX in the coming weeks. Can you explain to us the equity ETFs that you'll have on offer first?
Sure, so we've got 3 equity ETFs. We have an ASX 100, which gives exposure to the top 100 companies in Australia. That's 50 large cap and 50 small cap. It's very strong performing ETF. It's actually got stronger performance than the 200, and it has a yield of 4.5% plus franking credits. We also have an Australian domestic high yield product, which is our 300 high yield plus ETF. That product, Dan, is actually yielding 5.3% plus franking credits. So in the current historically low interest rate environment, that's a very attractive yield for investors. And our final equity product is an S&P high yield low volatility ETF, and this is the first ETF in Australia that offers high yield equities with volatility screen, and that ETF is yielding 7%, which is roughly double the 1.9% of the standard S&P 500 index.
You'll also have a US dollar ETF, a physical offshore renminbi ETF, and also a physical gold ETF, which will be stored at the ANZ Vault in Singapore. What are the fees associated with signing on?
So the gold ETF's 0.4% per annum, the US dollar ETF is 0.45% per annum, and the renminbi ETF is 0.57% per annum. And these are all very cost effective when you look at the costs associated with accessing, say, gold, where you have to pay to transport it, insure it, value it, etc. And also currencies, where a lot of investors don't have the ability to trade currency derivatives, currency options, or they don't have access to FX accounts. So again, this is just allowing ANZ to bring investment solutions to a broad base of Australian investors.
And fees for the equity ETFs?
The ETFs, so the ASX 100 is 0.24% per annum, and then both of the other products are 0.35% per annum. So very low fees, especially when you compare them to, say, managed funds, which would typically have management fees of between 1 and 1.5% per annum.
And ETFs don't necessarily guarantee a return, do they?
No, they don't. ETFs will track the particular market they're giving exposure to. So obviously if the market falls, then the ETF will go down with it. But with ETFs, they actually offer very diverse, broad-based exposure. So the ASX 100 ETF that I mentioned, for example, has the top 100 companies in Australia. So if 1 or 2 companies perform badly, investors still have a well-diversified spread to their investments.
And the Australian ETF market has almost tripled in size since late 2012, but ETFs still account for less than 1% of domestic trading activity. How are you gauging the investor appetite for exposure to a product like an ETF at the moment?
Yeah, I think the ETFs are starting to get much more prevalence in Australia. I think Australian investors are starting to appreciate the ease of access and low cost aspects that I mentioned earlier. And also I think there's a bit of a disillusionment with inconsistency of active managers beating their benchmark. With an active manager that doesn't beat their benchmark, obviously they pay high costs. For some markets, particularly efficient, broad-based equity markets, we believe you're much better off to access those through a low-cost vehicle like an ETF. And as I mentioned earlier, the ETFs providing access to difficult markets like gold, like currencies, allows Australian investors to diversify away from Australian equities and the Australian dollar, where most Australian investors tend to be overweight. So I think Australians are starting to appreciate the benefits of ETFs and how they can help them achieve their investment goals.
And ANZ is the first to blink, the first major Australian bank to enter the ETF market. Do you expect to have a first mover advantage here, do you think?
Yeah, I believe so. I think the fact that there are, as you've mentioned, a lot of Australian investors that haven't started using ETFs, now that these ETFs are being issued by one of the world's strongest banks, one of the big four in Australia, and of course a household name, I think it will put ETFs on the radar of many more investors. I actually believe, Dan, this is a game changer for the ETF industry, because once these people who have not traded ETFs before trade one of our products, see how easy it is, see that the ETF does exactly what it says on the can, then suddenly that opens up the whole market of 110 plus ETFs here on the Australian Stock Exchange.
Okay, Danny, we'll leave it